Time now for the markets with Leighton. And the Russian market remains closed to U.S. farm goods.
That has happened. Russian President Putin has indeed extended the existing ban on imports from the West for a year. Also ahead, these stories in this market segment as we enter the last half of July. There is optimism in some quarters about the potential of cash cattle prices. Cotton prices are likely to remain stable, and there were no real surprises in the latest round of corn and soybean numbers out of the USDA. We begin with the threat to Mississippi's chicken and egg industry, a threat from avian flu that apparently is closer to reality, according to the USDA. The nation's top veterinarian, Dr. John Clifford, says the Animal and Plant Health Inspection Service is preparing now for that virus to occur all across the country this fall. That would include the Mid-South and Southeast. Feeder cattle prices traded sharply higher at midweek. Analysts have noted a lot of difference lately, though, between cash prices and the board as far as this livestock market. Trader Walt Hackney says he's hearing a lot of optimism about the direction of the cash cattle market.
I have cattle feeders today that are willing buyers of feeder cattle at this market, indicating that we very easily are going to see $1.60 fed cattle again in the cash markets soon. They're also indicative of the fact that we're going to see, instead of the $2.40 and $50 dollars per hundred of these feeder calves for October delivery, they're still very convinced that that could easily go to $300.
Time to break for the trivia quiz on Farm Week. Our topic concerns horses and something a farrier would know about. Here is the quiz question. How many nails are usually put into a horseshoe? Is the answer A, 4, B, 6, C, 8, or D, 10 nails? You'll find out in a few more minutes. Earlier this month, boll weevil management and the Farm Bureau Cotton Commodity Committee all met in Grenada. Ag economist O.A. Cleveland told that group cotton seems to have built in a low price of around 65 cents. Delta Farm Press reports that Cleveland thinks there may be bumps up to 70 cents along the way. DuPont Pioneer analyst Virgil Robinson, meanwhile, says prices look stable to him and supplies worldwide are adequate.
We were all concerned about the El Nino effect in a couple of regions, cotton growing regions, one being India, the second being Australia. The Indian monsoon through the month of June, believe it or not, was at or above normal. So the Indians, I think, are on track to produce another large crop of cotton. The Chinese probably are the wild card here. As it has been decided, they will try and reduce the huge in-country reserve that they currently own. Now the problem is their ownership price is pretty high in relationship to today's international market. So it is conceivable they pass that offering and look to international suppliers because of the price differential.
The July 10th monthly crop and supply demand update from the government lacked the fireworks of the June 30th acreage report as far as the corn and soybean markets. Extension ag economist Brian Williams says the weather the next few weeks will likely have a lot to do with future price action in the grains and oilseeds. Well, Brian, the USDA report showed tighter stocks of old crop corn. How much tighter are we talking about?
It did. We saw a pretty big decrease in the ending stocks for last year's corn crop, 97 million bushels lower, and that was lower than what expectation was. But what we saw is a 50 million bushel increase in feed use, 25 million bushel increase in ethanol use, and then another 25 million for exports. And then we saw imports come up a little bit to kind of make up that difference.
So is this change going to prop up prices, make them a little bit stronger as far as corn?
Well, probably not too much. It was a little bit bullish, but overall it was still well within kind of what the expectations were for analysts.
What about new crop corn? What kind of ending stocks are they projecting on that?
Well, we saw the lower ending stocks. First of all, we had the carryover was lower from last year. We also saw an increase in or decrease in production because of that lower acres that from the acreage report a few weeks ago.
So is any of that bullish for the market?
Slightly, but again, none of it was too far out of the range of expectations. So while those numbers in and of themselves would be bullish, it was pretty well already built into the market.
So what kind of price picture might we see rest of July and into August as far as corn?
Well, the big thing to watch for going forward is July. It makes up about 90% of the yield. The weather in July does. So so far we've seen good weather across the Corn Belt, and so it looks like we could have a good corn crop. So the rest of this month is really going to kind of determine what prices look like going into harvest time.
All right, let's shift over to soybeans. What kind of new crop outlook are they projecting?
Well, they increased our production for soybeans. We had a few more acres. They didn't really do anything with the yield. And then we also saw some changes in our other balance sheet. Crush has been strong. Exports have been strong as well.
And so will price, very briefly, likely change much as far as soybeans?
Kind of with corn, it's really hard to tell. We've seen a little bit of drying out in the Corn Belt, and so we might see a few more late acres of soybeans go in, and then the growing conditions seem to be fairly good. So it's really, we'll have to watch the weather and see how it goes.
Back to trivia to wrap things up for this week. Our right answer is C. Usually 8 nails are put into a horseshoe.